Small business loans are no longer discovered the way they used to be. A business owner may ask AI for the best lender, the best bank, the best line of credit, the fastest funding option, or the best startup financing path. Those sound like similar questions, but AI systems often route them to very different answers. The real competition is no longer just lender versus lender. It is which brand gets assigned to the buyer's next step. Hey, I'm Mark Huntley, founder and CEO of CiteWorks Studio. At CiteWorks Studio, we study how brands show up across Google, AI answers, and the public sources buyers trust before making decisions, and how that visibility turns into credible citations, comparisons, and recommendations. Small business loans are now part of a wider AI discovery environment. AI systems do not treat the category as one simple marketplace. They blend business banking, SBA-style borrowing, online lines of credit, startup funding, short-term loans, business checking, and lender comparison into one decision layer. That changes who wins. A lender may be relevant, but if the AI system interprets the user as needing a business banking relationship, banks and hybrid finance brands may win the recommendation before a pure lender even enters the shortlist. The strongest overall AI recommendation position in the benchmark belongs to Chase. In the May 2026 Small Business Loans Snapshot, Chase captured roughly $1.32 million in modeled monthly recommendation value. It also had a 25.8% top 3 recommendation rate, a 12.8% rank 1 recommendation rate, and a 1.68 average recommended rank. That combination matters because Chase is not just visible. Chase is being placed high in the answer when AI systems decide which provider to recommend. Chase benefits from a simple, repeatable role: traditional bank, broad business banking, branch network, relationship lending, and established business fit. Bluevine is the strongest online and fintech challenger in the small business loans benchmark. It captured roughly $560.7 thousand in modeled monthly recommendation value, with a 21% top 3 recommendation rate, a 9.8% rank 1 rate, and a 1.78 average recommended rank. Bluevine's advantage is clarity. AI systems repeatedly frame Bluevine around online business banking, business checking, lines of credit, speed, and convenience. That makes Bluevine easy to recommend when the buyer's question sounds digital first, credit focused, or banking adjacent. In AI discovery, the brand with the cleanest category role often gets the cleanest recommendation. Bank of America is also a major force, but the benchmark shows an important distinction between visibility and first choice recommendation. Bank of America captured roughly $419.5 thousand in modeled monthly recommendation value and performed strongly in established bank and decision stage contexts, but its average recommended rank was 2.18 and its rank 1 recommendation rate was 3.5%. That means Bank of America is credible and frequently present, especially when prompts involve relationship banking, existing customer benefits, business maturity, or pricing decisions. But visibility alone is not the same as owning the first recommendation. The benchmark also shows specialist lenders occupying narrower lanes. OnDeck is associated with fast funding and short-term loans. Fundbox is connected with startups, newer businesses, and working capital lines. Lendio plays a marketplace and comparison role, but National Funding, QuickBridge, Funding Circle, and Biz2 Credit appear materially undercaptured in the public shortlist layer. The issue is not simply whether these brands exist in the market. The issue is whether AI systems have enough consistent public evidence to assign each brand to a clear recommendation role. For leaders in small business loans, the lesson is direct. AI visibility is not enough. Being mentioned in an AI answer is not the same as being recommended. Being recommended is not the same as ranking in the top 3. And ranking in the top 3 is not the same as owning the buyer's decision path. Leadership teams should monitor prompt clusters, recommendation placement, citation architecture, and the difference between presence and recommendation. The brands that win AI discovery will be the brands that are easiest to understand, easiest to validate, and easiest to choose. The small business loans category is being compressed into a few provider archetypes: the traditional bank, the online finance challenger, the established bank relationship provider, the fast funding lender, the startup-friendly lender, and the marketplace. The real takeaway is simple. AI systems are not just choosing small business lenders, they are deciding what kind of financing path the buyer needs. The brand that owns that interpretation owns the shortlist.